US Federal Reserve will save Credit Suisse. This is a question mark. I'm not kidding you guys. This is a definitely must-watch video. This is extra, and I want to share this with you. And don't move away from a screen because you're going to be mind blown, alright? The thing is this, before we go into that, make sure that your risk assessment, your management is all done properly. And thank you, Ames, for the kind sponsorship. Now, remember my video on Credit Suisse, okay? Now, about 13 days ago, alright, I talked about what if an international bank really collapsed? And would there be a of Lehman 2.0 coming? And that's something that I shared. And of course, not too bad, got a bit of views on it. But of course, very soon itself, right, the reason was because there was an ABC reporter that tweeted that there could be a major international investment bank is on the brim. And of course, interestingly, after he tweeted, right, less than 2 days later, the tweet was deleted. Okay, it was deleted. And no one talks about it anymore. But for me itself, I'm a very daring guy. I look at the chart, I see what is going on, and I gave the prediction that Credit Suisse will see $3. Okay, I said that it will see $3, and from the last done price at $4 to $3, that's another 25% drop. Now that was what I said about 13 days ago. The thing is this, let's just look at the chart right now. On that day after we talk about that, the next day after the tweet was removed, remember, then there was some intervention that came in and said that no, there's no such thing as a Lehman crisis, blah blah blah. Huge volume came in. Alright, so at this junction here itself, people will say, KL, see, you got it wrong because the volume came in and the price went up. Okay, fair enough. Alright, with a huge volume, right? A huge volume, yeah. But the thing is this, incredibly, the last few days, can you see right now, the market came off. This is something pretty odd, right? If there's nothing in the market itself, why is it coming down? Now, the main thing is this, look at the volume. The volume is going downhill. Wow, this is not a good sign. Now, if this is already a good deal for buying, why the price is coming down? Two, why the volume is dropping at an alarming speed? Something is definitely wrong at this stage right now, okay? I will say that. Because now, the latest numbers show that the Credit Suisse default swap, the Credit Suisse credit default swaps are now, the spread itself is near high level, and that's how high it was back to the high back in year 2008-09 period. Now this is madness, okay? If there's nothing happening, why is this going up at such a alarming speed right now? Something is definitely wrong. And of course, what is a CDS? In case some of you want to ask, let me just share you right now. A CDS is a financial derivative that allows an investor to swap or offset their credit risk with another investor. To swap the risk of default, the lender buys a CDS from another investor who agrees to reimburse them if the borrower defaults, okay? So in short, it's just like buying an insurance and someone had to insure. So the thing is this, the only reason why the CDS now is going up itself because more and more people are buying this insurance. But of course, when you buy, you must pay a. So of course, if nothing happened to Swiss, then of course those people who buy the CDS will lose the premium. But do understand this: if let's say it goes the other way around, oh my God, someone has to pay a lot of money, and that is the reason why there is this ongoing rumor say that Credit Suisse may or may not be a Lehman moment, but something's going to break, and this is done by some guy from that was reported on CNBC. Okay, now this is not the point that I'm trying to stress right now. Now remember, we have top traders who use CDS to profit, right? And one of them is definitely Michael Burry. This is actually a scene that actually remake where he was at this particular company, Goldman Sachs, and trying to make the deal. And of course, the guys was laughing away because they believe that nothing will happen to the property market in America, which obviously for the last 50, 60 years back then, it has never happened. But of course, Michael Burry being Michael Burry, he saw the opportunity. He came up with a very incredible way of understanding this and started to buy. And then what happened? We all know that the market collapsed. And of course, Michael Burry made a lot of money from that. And of course, that was in 2008 and 9. The most recent one was this guy, Bill Ackman, right? He made a $2.6 billion CDS trade back about a couple of years ago, and he made a lot of money also. These are the guys who use a lot of money to buy on the CDS and profit even more. So why am I bringing this all in right now? Because again, as you can see now, the CDS 5-year is really at a very high level, and there's a rational good reason why people are buying this. I mean, there must be a good reason. If not, why would you buy it? Now, the first time when people started to buy was in June period, And you can see after that, right, the market went sideways or stock market bullish. The stock market went up, right? The Dow Jones went up for a few months. That's why people stopped buying CDS. But the problem is, why suddenly in October itself, right, the buying come back again. And this time around, the buying is almost twice than the one in front. So this is where it gets very concerning right now, okay? So let me get some news for you at the moment. Let me just bring it to you right now. That 1 week ago, this Straits Times, our own Straits Times actually says that the Moody's Investor Service expect losses on Credit Suisse to swell to $3 billion, right, for this year alone. And of course, 1 day ago, Credit Suisse prepared business sales to raise capital. Why would they want to do that, right? Another issue. And the most latest one, which is just an hour ago, Credit Suisse just reached a $495 million mortgage settlement with U.S. prosecutor. So again, another fine. So you can see that, right, there's a lot of things happening now for Credit Suisse, and this is like the news all over the place, and it's not anywhere good. But the crazy part is this is where I'm trying to tell you now. Do you know that Federal Reserve have this thing called the Central Bank Liquidity Swap Operation, not known by many people, right? Never mind, let me explain this to you. Now, Federal Reserve, they have done something very interesting. In October the 12th, okay, they actually loan or gave, or more like loan, $6.2 billion to Swiss National Bank. Okay, why would they do that? In fact, usually even they give to ECB is like a few $100 million, which is pretty normal for cash flow. But to come to be $6 billion, and the time itself is just coincidentally in October month, right? Okay, it was just a couple of days ago. And some more, this is where it is. All right, we search another one more. Apparently, this is another one. It was done in May. Okay, done in May. Okay, and you can see right now the trade date itself, and you can see that what happened. Okay, this is another $3.1 billion. Okay, so why am I bringing this right now? In total itself, right, usually central bank like Federal Reserve, they don't really give much money to other people, but in total itself now, they're given as much as nearly $10 billion. So why would Federal Reserve save his pal, right? Why I say pal, right? There's a reason for that coming up. Okay, the reason is pretty simple, because now we all know that the Swiss Central Bank is keeping a close eye on Credit Suisse, okay? This is no joke. The central bank is keeping a close eye on Credit Suisse. And of course, you should know what happened to Credit Suisse, right? Likelihood, okay, according to some reports, they says that, right, okay, Credit Suisse has lost a big time back in 2021, right? And the reason is because of all the things that they have done. But this year itself, right, they have been hit by this guy and of course by this particular company. So in total itself, right, Credit Suisse has lost billions of dollars because of these two big cases, and that's for 2022. So if 2021 was bad enough, 2022 is even worse. So that is the reason why people are running away. But wait a minute, what I do with Federal Reserve, right? Now, hold on. Now, back then itself, when the pandemic hit, right, the stock market in US was coming down at alarming speed. Remember? You notice that there was some instrumental buying right here, right? So we dig it on this, and I realized that that could be one reason, because our Jerome Powell called into the Swiss National Bank and asked for help. So the thing is this, they bought in $97 billion back in February. Interesting, right? Okay, not the end yet. Then after that itself, right, in April, Jerome Powell called SNB again and say, you know what, let's have some help. And interestingly, wow, look at the stock market. Again, it rallied. And of course, later on, we see that Jerome Powell calls again, asks for help in August, and bang, the market went up. So every time when Jerome Powell needs some help, right, SNB usually comes in and help. Now, of course, these dates itself, right, let me remind you, these dates are not exactly the dates that I'm just purely speculating it, but of course with money coming in, it's undeniable, usually that's where shares goes up. All right, so this is what happened in the first 3 times. And what about recently? Yes, recently in February they did it again. So in February, what happened? Let's take a look right now. Okay, moment. Oops, okay. In February, right, it came in again, 166 billion. So I suspected that this rally was done by them. And of course, the market went up. Cool. But the problem is, guys, take note. Now the market is here. Oh gosh, okay, the market is here. So the question is this, okay? The question is this: will Jerome Powell seek more help. But SNB now at the moment is watching Credit Suisse very closely. And we just saw that, right, Jerome Powell or Federal Reserve came in to save or gave some money to SNB. So what I'm trying to say here is pretty clear that someone is in trouble. And of course, the guy who helped them, which is SNB, will likely need some help. And if you think about this, if really Credit Suisse do go down for some reason or get hit very badly, then naturally SNB will be affected. And if SNB get affected, what will happen to the US economy? This is the thing that I'm trying to highlight it right now. So don't you think it's very incredible? Now the thing is, I checked on the Swiss National Bank portfolio, and you can see right now it's worth $147 billion. That's a lot of money. But the crazy part is this, guys. The bank top 100 holding heat map, oh my god, almost everything is US. Yes, their top buying is Apple, Microsoft, Amazon, Google, Tesla, and so forth. So think about this. Imagine that if, let's say, SNB really needs some help, all right, of course, Jerome Powell must help, because if he doesn't, I'm holding so many of your counter. So guess what will I do? So interestingly, we saw the latest update on the chart. And of course, there's some speculation going on. One is that because probably the portfolio came down because the stock market came off in US. Okay, that's one reason, look at it. But from the top itself, right, the US market is down by 20%. Okay, so this is something roughly near there. But the question is, if let's say the SNB really needs some money, what can they do? Well, they can consider to lower down their portfolio so that they can release some money to save the day. Or the better way is call your pal and ask him for help. Okay, so that is the reason why I felt that as time goes by, with US Federal Reserve increasing their interest rate at the moment and things getting worse because of the stronger dollar, I believe that something silly, crazy might happen. Now, this is something that I got from Bloomberg. Apparently last Friday, a trader used option to put a wager that the VIX could jump up to 100. Oh my goodness, this is really incredible, okay? Now, because the VIX is only at 32, right? To go to 100, that means must have a catastrophe must happen, okay? Now, in total itself, right, the total amount is about $4 million worth, okay? So you can see right now, right, these 3 months SOFR has the open interest has mounted up a little bit, and this is no joke, okay? Because again, that is pure cash or money putting into the system. But of course, is it too early to call? I'm not too sure because it's April right now. But for me itself, through my I'll follow you Telegram, that's only for TWB students. I've already mentioned that you can consider to buy some VIX, and I'm pretty confident and give it 8 out of 10, okay? But of course, I did say go slow because the chart of this looks very clear. Now take a look, guys. This is the VIX itself. Don't you find it's a very incredible pendulum waiting to break out? Now, of course, the thing is that how about downside potential? Well, for it to come down, we must have some very exciting positive news. But look at the bank's earnings, look at the S&P 500, the forward earnings, the coming inflation problem, and all the interest rate. I really cannot see how this can happen. I can't see this. So in fact, it's alright, I do see this. So in fact, I'm looking at 42 to 44 coming up. And of course, who knows that this CDS problem could be one of the catalysts that could bring the market higher, alright? Or higher in terms of VIX, of course. Alright guys, so take note of all this information itself. Make your own decision. Now, I'm not calling for a crash, but I suspect that if really Credit Suisse do get into trouble, there's a high chance that Credit Suisse may go down by another 25 to 35% based on the current price right now. Okay, guys? Make sure to put your stop loss and enjoy this ride. This is Cal signing off. Have a great day. Bye-bye.